So I had already scheduled to record a video about Amazon stock and my updated price target by the end of 2026. And this morning I woke up to the news that Amazon's web services is causing outages for websites worldwide. So I will incorporate those developments into this price prediction, price target video, and how it will negatively impact Amazon going forward. And I'll use a comparison to CrowdStrike and the outages that CrowdStrike caused roughly 2 years ago and the negative implications CrowdStrike is experiencing, and connecting it to Amazon's outages and estimating the negative outcome as a result. But before we do that, I'm going to take a look at Amazon and estimate where I think the stock price will be by the end of next year. But in order to do that, I need several pieces of information. I need some analyst estimates, and I need the forward price to earnings ratio to combine all of these factors and create the price target for next year. Speaking of information and data that I need to make this price estimate, it's a great moment to thank the sponsor of this video, Fiscal.ai, my preferred data provider. What you can get as an investor from Fiscal.ai is an aggregation of a lot of information that's available in some cases and unavailable in other cases. For instance, this video, I'm going to make my price target for Amazon stock for the end of 2026. And to make that price target, I need the company's earnings per share estimates according to the Wall Street analysts that are following Amazon stock. Well, I can get that information on Fiscal.ai. They have the December 2027 earnings per share estimate as followed by the analysts that are following Amazon. So according to those analysts, they think that Amazon will deliver $9.22 in earnings per share in 2027. Now, when I'm making a price target for 2026, I need the earnings per share estimates for 2027 because I'm going to combine it with the forward price to earnings ratio. And that's another data point you can get from Fiscal.ai. They can present it to you in cool looking charts like this one here. The forward price to earnings ratio for Amazon stock is 31.22. So I'm going to need this number in conjunction with the earnings per share estimate for 2027 to make my stock price estimate for Amazon in 2026. By the way, if you're interested in Fiscal.ai, there's a link in the description. If you use my affiliate link, you'll get a free trial and a discount on your Fiscal.ai subscription. So now that we have the data that we need to make the price prediction, let me share with you my model, my scenario analysis for Amazon going into next year. So I already shared with you the $9.22 and the place on Fiscal.ai where I retrieved this figure, and I shared with you the forward price to earnings ratio of 31.22. So if we combine these two, and we think that everything is on track and remains the same, nothing changes, and the company moves forward, progressing towards the $9.22 in earnings per share, and the market values the company at a forward PE of 31.22. In that scenario, Amazon stock price could end next year at $287.85. That would be a nice increase from the current market price of $216.42 as I'm recording this video. As an Amazon shareholder myself, I bought Amazon stock roughly 3 weeks ago. I would be grateful for that return on investment. That's a great return on investment for a stock with the risk profile of Amazon. So I would be happy with that return. But there's an upside scenario as well. If the forward price to earnings moves higher to 33, the stock price could move even higher to $304 a share. And if there's even more momentum in Amazon stock, the forward PE ratio could rise to 35, which is not unheard of and would not be ridiculously expensive. It would not be expensive at all for a stock like Amazon. At 35, the stock price could rise to $322 per share by the end of next year. That being said, it's not all upside here. There is a downside for Amazon stock, and there are scenarios where the forward PE multiple could decline to 20, and in that scenario, the stock price could fall to $184 per share. So you might be asking, well, what scenario could cause its forward PE ratio to fall to 20? And there are an infinite amount of scenarios, but the most likely outcomes could be that a result of the increasing trade barriers between the United States and China causes a huge decline in purchasing activity on the Amazon platform, as the suppliers on the platform, the third party sellers on the platform, find it difficult to source products from China and sell to customers at attractive enough prices. And so they have to raise prices that they charge customers on Amazon's website, and customers bulk at the higher prices and stop purchasing from Amazon and go elsewhere or spend their dollars on other products, or maybe on not buying any products at all, on buying services instead of products, spending their money going out to restaurants or going out to movies and concerts and theme parks and ball games instead of spending money on the various products that you'll find on Amazon's platform. That's just one scenario that could cause a big decrease in its forward PE multiple. Another scenario that could cause a decrease is Amazon losing market share in the cloud services segment. We've seen companies like Alphabet and Microsoft making huge investments in this category, and they are growing revenue in those categories faster than Amazon is growing revenue. On top of all that, you had the outages that I talked about earlier in this video. Whenever you have an outage like that, you lose customer trust. And those customers that were already on the fence thinking about switching over to Microsoft or Alphabet now might have a reason to make that switch. In order for Amazon to keep those customers, they might have to offer them incentives to stick around. They might also have to offer these customers that experience these outages a refund or a compensation, something to make up for the fact that they're losing business because customers cannot access their websites. And so if I'm using CrowdStrike as a proxy, CrowdStrike is still paying the price for the outages it experienced a couple of years ago. The company is experiencing a mix of negative consequences, a loss in reputation, a loss in customers moving over to other providers, and in some cases, CrowdStrike is giving incentives and promotions to the customers that were impacted as a result of those outages. It could be costing the company, there are estimates, over $1 billion, closer to a couple of billion of dollars over this time, and then the present value of the expected loss of cash flow in future years as a result of the loss in reputation. So using that as a proxy, Amazon's business could be impacted by some billions of dollars as a result of this outage. Now it's still ongoing and the implications are still being hashed out. But these are just rough estimates, just as this news is coming out this morning. So those are some scenarios of downside for Amazon. But what do I see as the most likely scenario? Well, I think the company remains on track to hit these targets, and the market doesn't change its opinion of Amazon all that much, still trading around this range of forward price to earnings of around 31. Overall, I think the price reaches a range of between $280 and $310 by the end of next year. So that's my price target. I'm curious to hear what your thoughts are on my Amazon stock price prediction. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.